Intel, the worst performing chip stock this year, with shares losing more than half their value. So does this underperformance lower the bar into earnings after the bell tonight? Let's ask top chip analyst Stacy Rasgon of Bernstein. He covers the name, as you know. Welcome back. It's good to see you.
Good to be here.
So I look at your note, and I think you sum up what every Intel investor is thinking about. Quote, we don't really know what to do with Intel stock these days. I guess that kind of says it all. Why are you flummoxed by this name?
You bet. So, as you know, I've been pretty negative for a long time on the stock, and I'd say we're still pretty negatively biased. That being said, I'm kind of afraid it's hard to run out and short it when you're getting headlines like so-and-so is going to buy it like every other day. And I think it was up, I can't even remember, 30% in 3 days on some of those acquisition rumors, which, to be fair, I find a little implausible, but I guess we'll find out. At the same time, though, it definitely doesn't feel like a long either, right? I mean, we've got issues in the PC market. We've got a CPU channel that's stuffed full. In servers, their competitors still taking a good amount of share. They don't really have any AI story to speak of to help make up the difference. And now I'm starting to get more and more worried about the trajectory for gross margins. They've kind of been suggesting that as they ramp some of their new products that are actually have a lot more outsourced content, which hurts the margins. They've kind of been suggesting that that may actually be an incremental headwind to margins as we get into next year. So and then you couple that with just everything else around the process roadmap and burning cash and everything else. It doesn't feel like a good situation to be in. I mean, clearly they're in a tough spot.
But I mean, the stock reacted terribly to the report last quarter. Maybe that lowers the bar going into tonight. What do you think about that?
To be fair, it collapsed a lot after. It's actually up pretty decently in the last month or so. Again, on some of these other news stories that have been coming out around potential M&A and everything else. So, I don't know. It's hard for this one for me to suggest that expectations are low. I feel like they're higher than they were. And to be fair, I mean, even if expectations are low, they could very easily come in below. I'm very interested to hear, by the way, not just their commentary for the quarter, but any sort of incremental commentary they can give us for next year. I'm getting more and more worried. Our numbers are quite a bit below as we go into 2025. So I get worried about that, particularly, again, without the AI ramp to help to buffer things and in particular gross margin. So anything they can give us on next year would be helpful to try to maybe lower those expectations further. But there's always room for them to go lower, I think, with these guys.
So Pat Gelsinger's coming up, by the way, in overtime. I mean, I know you're gonna watch that. I mean, what would you tell him? What's the number one thing if Gelsinger calls you up and says, "All right, Stacy, I know you hate the stock. It's kind of obvious. You keep telling Wapner you hate it. But what would you tell him he should do?"
Yeah, I mean, this is the real issue. So we can argue is the strategy, was it the right thing or the wrong thing? That's a longer discussion. The problem is, though, they didn't put the cost structure into shape like when he got there and everything else. And really, the problem is that the core business assumptions that they were basing on to bridge them to get that strategy to work, that the core business just doesn't really support the path. It's not generating cash to speak of to support their investment path. But it may be too far along to stop, right? I mean, that's really the issue. I don't know that they can. I don't know if it's politically viable, but frankly, to stop what they're doing, given all the CHIPS Act money and subsidies and everything else. But I just don't think the core business in terms of PC trajectory, server trajectory, AI trajectory, there's just not enough oomph there to support them as they go along. But again, I don't know that the right solution is to stop either. You'd pretty much have to scrap everything that they've done. Probably just everybody talks about a potential split, and I don't think that's really viable right now. The foundry can't stand on its own. I don't think you can get somebody to buy it as an operating business that's losing tons of money. I think in a hypothetical situation, the solution would be to scrap it. But I don't think they can do that for political and other reasons. They're just in a tough spot. I don't exactly know what it is that he ought to be doing. Beyond just cutting costs, probably a lot more than they may have to. I guess we'll see what happens. And hopefully bridge enough of a path to get to where they're trying to go, to get the new processes out. And hopefully those processes are successful and try to build the business. I mean, they gave some targets for 2030 that, if you wanted to believe, painted a picture. But I mean, there's just a ton of wood to chop between now and then. There's no real good way to judge it externally, how it's going either. They're in a tough spot.